Today, we're diving into a story about how a seemingly straightforward government tariff policy can morph into a multi-billion-dollar bet for Wall Street insiders. It's a fascinating look at the hidden machinery of our economy and who really benefits when the entire system is thrown into chaos.
Yeah, this quote right here, it pretty much says it all. It points to this really murky area where the line between making public policy and making a private profit gets, well, it gets incredibly blurry. So let's break down exactly what we're talking about.
Okay, so it all kicks off with this really controversial tariff policy. But this wasn't just some political squabble. It actually created a pot of money worth billions of dollars that was suddenly up for grabs, with its fate hanging on a single Supreme Court ruling.
So here's how this financial play allegedly went down. First, you have companies paying billions in these tariffs. Now, while all the legal challenges are happening, a financial firm swoops in and buys up the rights to those potential refunds for just pennies on the dollar. Then, bam! The Supreme Court says the policy was illegal. The government has to pay all that money back, but not to the original companies. Nope, it goes to the firm that now holds the claims. And all of a sudden, those claims are worth 100 cents on the dollar.
And just look at the potential payout here. It's kind of staggering. By getting in for just 20 or 30 cents on the dollar, the firm was set up to cash out at full value. That's a potential 3 to 5 times return on your money. And it all hinged on one single court decision.
And here's the kicker. The firm that was allegedly making this massive bet was Cantor Fitzgerald. And at the very same time, the Secretary of Commerce, who was reportedly advising on this exact tariff policy, was its former CEO. Now, he'd transferred his assets to family trusts when he took office, but you can see how this raises some serious questions about a potential conflict of interest.
But look, this one story, as wild as it is, it's really just a single piece of a much, much bigger puzzle. To really understand what's going on, we have to zoom out and look at the larger system and all the powerful groups that are constantly competing for control.
And the key to understanding this entire system is one word: leverage. We're not just talking about money here. We're talking about influence. Leverage can be political, it can be financial, military, or even technological. It's the tool each player uses to shape the game in their favor.
So think of it like there are 4 main teams in this game. First, you've got the sovereigns. That's governments, and their leverage is making policy. Then there's the financial industrial complex. Think Wall Street. And their leverage is controlling the flow of money. You've got the military-industrial complex, which actually benefits from instability. And now you've got the rising technological-industrial complex, big tech, using data as its leverage. And trust me, their interests are not always aligned.
So what's the big fight that's causing all this tension between these powerful groups? It's a massive, historic economic U-turn that the United States is trying to pull off right now.
To put it simply, the U.S. government is trying to slam the brakes on 40 years of economic policy and throw the car in reverse. It's attempting to completely rewire the engine of its economy, and that is an incredibly disruptive and difficult thing to do.
And this slide really nails the core conflict. For decades, the American economy has been all about financialization. Exporting dollars, focusing on a paper economy of stocks and bonds that makes asset prices explode. It's a system that's been great for Wall Street. The pivot is towards industrialization, getting back to actually building real things, boosting domestic manufacturing, and supporting a labor-based middle class.
So why even try to make such a painful pivot? Well, it's become a matter of strategic necessity. Decades of outsourcing manufacturing, even for critical military parts, to geopolitical rivals like China, have left the U.S. in a really vulnerable position. The government is waking up to the fact that you can't really be a superpower if you don't actually make anything.
But if this big shift is so important for national security, why is it so incredibly hard to pull off? Well, the answer is a strange paradox, a trap that America basically set for itself through its own success.
You see, the United States is kind of trapped by being number one. Having the world's reserve currency, the dollar, gives it enormous power. But that super strong dollar also makes American-made goods incredibly expensive for everyone else in the world. So over time, it just becomes easier to export dollars and buy cheap stuff from other countries, which hollows out your own industries. When a country gets stuck in this kind of trap, history shows there are basically 3 ways out, and let me tell you, none of them are pretty. Option 1 is austerity. Cut spending, raise taxes, which is almost always political suicide.
Option 2 is what's called fiscal dominance, which is a fancy way of saying you let inflation run hot to slowly burn away your debt. And option 3 is to devalue your currency, which, for the US, would risk the dollar's top spot in the world.
And that is where tariffs come back into the picture. They become this messy but strategic tool. They let the government try to protect and rebuild industries at home without having to come right out and say, we need a weaker dollar, and risk crashing its global status. It's an attempt to walk an impossibly fine line.
Okay, so let's bring this full circle. How does this massive, high-stakes, global economic pivot connect all the way back to that one financial bet on a simple tariff policy?
Well, a huge system-level change like this doesn't happen quietly. This epic battle between financialization and industrialization and all the messy policies like tariffs that are used to fight it, they don't create stability. They create enormous uncertainty and volatility in the financial markets.
So what's the real takeaway from all this? We talked about a specific financial bet, a clash of powerful groups, a huge economic shift. What's the one thread that ties it all together?
The bigger story isn't just about one company or one policy. It's that the systemic instability, the chaos itself, creates profitable opportunities. The volatility becomes a product. And in a game like this, it's always the players who are closest to the decision makers, the ones with the best information, who are positioned to profit from the outcome, no matter which way it goes. And that leaves us with a pretty big question. Can a system that's designed to create winners from chaos ever truly become stable?